Good morning, good morning, good morning, everybody. Welcome to another Flow Show. We write Friday, the 17th of October. Unfortunately, Ryan caught his son's flu and he won't be with us this morning. We wish him, of course, all the best recovery and hopefully he will be back with us in full swing next week. But you will have to do with me, Cayman, for today. Before we start everything that's happening, and there is a bit happening, I hope I won't forget anything today. We are still offering, I think it's two $25,000 TFP accounts that we are going to give to two of our subscribers here to our email list to be aware of everything that's going to change when we will morph from Forex analytics into trading analytics. So to be made aware of all the changes, sorry, that are upcoming. The first ones to know, you will all also be, your name will be put into a hat, and two of you will have a chance to win a TFP program. So if you haven't done yet, if you have not done yet, um, it's about time you put in your name. What do you mean, Brand, by that stuff doesn't play? Do you not hear me? Can Oh, okay. Yeah, the flu. Yeah. It's bad. So you guys can hear me all right. Thank you. So that's it for the ads, and let's straight away moving to what happened. PBOC continues to add a bit of liquidity, but at the same time continues also to drag their fixing rate gradually, albeit very slowly, lower, fixed again under 710 today. And staying in China, straight away going into geopolitics, it has apparently been confirmed that Trump will go over to the APEC, sorry, meeting in Korea and will try to meet with President Xi. We're still, what is it, 12 days away from this, so there's may still be some changes there, but he is slated to go over there. Besant, in the meantime, also has said that there may be some discussions pausing some tariffs and pausing some increases in prices for Chinese products just to try and get China back on board with some of those discussions. We know that they have those working groups. I think, is it every week or every 2 weeks or so? But they haven't granted anything much yet. But on that front, it seems that it gets confirmed. We have not had the confirmation yet from the Chinese officials that this meeting will effectively take place. Staying in Asia, and then we're going over to the Japanese elections. It's more and more likely that Takaichi will be elected as the next prime minister just for the reason that the opposition cannot rally behind one person. Komeito this morning said that they would not vote for an opposition candidate. They may not vote for anyone, but they will not vote for a candidate. So that means less votes for potentially a Tamaki or even a Noda. CDP said that they would vote for their own candidate Noda, but the main news is that Ishin Nokai are getting closer, ever closer, to or to try at least to form a coalition with the LDP's Takeichi. It's not done yet. They are still discussing the whole thing, but they are getting closer and closer to a sort of an agreement, and there's still some points of discussion to be had. So we will have the meetings ongoing over the weekend. We may, because yesterday they dropped a few lines quite late in their day. Maybe they want to have a restful weekend or so, but we may still get the headlines that it's a done deal between them. And in the meantime, the two main parties, which are the LDP and CDP, have confirmed that, for now at least, the vote for the next prime minister will take place on the 21st of October. So that is next Tuesday. That will leave the opposition the last minute possibility to have meetings. But as we've seen already, Tamaki not being happy that the Ishin party went behind his back to negotiate with the LDP, has also not really come forward to say that he would rally behind any of the other candidates. So it looks to be a done thing there for Takaichi, unless last minute turns. Staying in Japan, we had Ueda on as well, and as well as Uchida from the Bank of Japan overnight. Ueda's views are unchanged, while they take all the risks into account, geopolitics, tariffs, etc., and him saying that they need more data to form a precise idea on when to hike the rates next. He did say that while everything is kind of moving in the direction whether of the view being confirmed, there will still be a next hike, so that he has not given it up. He's just keeping enough uncertainty for this month, where Uchida said that the Japanese economy is mildly recovering, moderately, sorry, recovering, although with some weak signs. So, or as well, playing both sides of the spectrum. He said that the prices are stabilizing right now, even maybe a little bit moderating, but the outlook remains for a gradual pickup in inflation in Japan. So also keeping the rate hike well open and on the table. But again, as we've already discussed many times now on the show, whether it be October, maybe a little early, but for sure I won't take another hike off the table once Takeichi is truly and well in the seat, and the next meeting in Japan would be on the 19th of December. And I think last year also in December, the Bank of Japan hiked rates. And they hiked it, and that's maybe a nice fact to know. They hiked it after a month where we saw positive real wage growth. Okay, so imagine that we get end of October, beginning of December, a positive real wages growth number out of Japan. I think we can pen in the diary that the chances for a rate hike in December are going to increase quite a bit. All right. Next, Trump had a meeting with Putin yesterday. He's also meeting with Zelensky today. There was nothing, unless I missed it, really bellicose coming out of the meeting. On the contrary, he says that they are planning a meeting within the next 2 weeks or so in Budapest, if I'm not mistaken, to meet again with Putin to try and end this war now. um, Yeah, Brian, it was a long and ongoing meeting, and I must admit that I've not really seen all the details of what came out of that meeting. Just the headline that they are going to try to meet again in the next 2 weeks to try and end the war in Ukraine. We know that the US has already said that they would likely. Up their support for Ukraine if Putin doesn't want to play ball. So maybe this meeting with Zelensky today is going to be an important one again. And then we had. Let me just see that I don't miss anything out of the States. Yeah, we had a few central bankers. We had Myron, and Walleron. both along the same line, both supporting more cuts from the Fed. And also Wallace saying that the Fed is about ample is about at ample reserves level. The next balance sheet issue is the composition of the balance sheet, not really whether they run it off more or not, hinting at they may be close, and we heard that from Powell already. They may be close to stopping QT in the US. Okay, that has been the main lines from Waller, if I'm not mistaken. Myron, of course, is always saying that the job market is completely broken, and that they need to cut rates a lot further. And both were talking about a couple more rate cuts before the end of this year, and that is now where the market is actually getting to as well, where there was enough uncertainty or fight back against more rate cuts before the end of the year. It seems now the market is turning its vest a little bit, and pricing in more rate cuts as well. We are seeing that on the yields as well. And the yields not only going down because of that. Okay, there is this shutdown which is now starting to have an effect. And actually, there was an article out yesterday and in the market that the banks now have started to tap the Federal Reserve short-term lending facility again. And over the past two sessions, over the past 2 days, which were, I think, must be Wednesday and Thursday, so they have borrowed up to $15 billion on the at the Fed's standing repo facility. Now, it may have to do with the level of the balance sheet, which becomes a little more stricter than it was before, but also in regards to what the shutdown may bring. And the longer this shutdown lingers on, the bigger the risk is that the banks will start to tap in that facility because of the potential liquidity issues elsewhere. And that will likely increase some of the nervosity that we have seen, especially yesterday, all of a sudden during the American session and flowing over into Asia, that we see the risk markets all of a sudden started to turn, and we have seen also the bank stocks have been hit quite severely over in the US and elsewhere. We have seen it this morning, by the way, as well. I was seeing that update that the French banks, for instance, have also been hit pretty hard this morning. So risk is starting to bite. It is the shutdown, but obviously it's also because of other reasons. We know the fight between the US and China. We know about still, I mean, Russia. Even if they even if they negotiate, they're still sending those drones out over Ukraine and vice versa every day. There's still a lot of uncertainty ongoing as well. And speaking about wars, etc., yesterday we had some comments from EU Foreign Policy Chief Callas, and he was talking about, or he, no, he was talking about the buildup of the European defense capabilities. We know that Europe has been lagging over the past 2-3 decades. They have been actually building off their military facilities, but now they are scrambling to ram them higher and saying that they may have to invest up to 7 trillion euros. They have put a roadmap together. They may have to invest up to 7 trillion euros over the next decade in Europe to build up those facilities again. So that means that we are not at the end of our geopolitical stuff yet. Right, what else? Pop, pop, pop. Okay, then we're moving over to the Bank of England. Yesterday, well, we had first of all Mann coming out, She said that there are downside risks, but to inflation, but it is still a persistent one. That the domestic component is the dominant inflation feature, and that the persistence in inflation is the main policy challenge for now. Um, it was quite funny because right when she ended speaking is rather the moment where the euro sterling found its bottom yesterday, which was quite funny as well. I mean, she was really on the rather hawkish side, but then the market obviously gradually started to turn around, and risks started to turn around as well, and we found the sterling halted in its advance then. Later, we had comments from Bank of England's Green as well, saying that she's looking at um, a European relationship improvement, helping the Bank of England's cause to bring inflation back down. And if you thought that Brexit was gone after 10 years, it's not, because she brought it back up, and she said that the Brexit hit the productivity in the UK pretty sharply. But that's not the main reason why the sterling got sold yesterday. We all know that sterling is a risk currency. I will come back to the sterling rates when we look at the charts, because yesterday I was talking about the um, the better doing gilts lending a bit of support to the sterling, but we found the inflection point once risk started to roll over for the sterling. Okay. I think I may be through all the headlines, unless you guys. Oh, no, no, no. I just want to mention one thing. Going into this weekend, and Stephen reminded me already this morning again about this. Um, Over the weekend, we will have a lot of protest meetings going on in the United States. So those No Kings, as they call them, rallies and marches, they will take place in the US. So if you're trading markets right now, listening to us, just bear that in mind, okay? It may be one of the reasons why the market will not want to go short risk into the weekend, because we know that Trump has already reacted quite angrily to those marches and stuff, and talking about sending the National Guards to San Francisco, etc. So beware for the weekend events in the United States, okay? Because that may be a factor and of weakened risk again, and then implying a risk, obviously, for the open when we will reopen markets on Sunday nights. All right, what's happened on the data front? Well, not a lot, but there was something surprising yesterday, which made us all scratch our head a little bit. We had this Philly Fed manufacturing index dropping extremely sharply yesterday, where there was expected a mildly positive number. But then look at all the components. Okay, yes, we had a bit of a lower employment component in there, but all the rest, the business conditions were better than the prior month, and the capex was actually double of the month before. New orders ticked up, and prices paid were keeping higher. So we a little bit in doubt about why really this number was so negative. Not that it had a big impact on the markets at the time, but it's just one thing to note. And if there are economists among us, please explain why this number is the headline number is negative, where the components are not showing the same direction. Okay. Furthermore, told already that we had Waller speaking. Waller couldn't stop yesterday. Oh yeah, we had Lagarde as well yesterday. Same as all the ECB members, with maybe some different sensibilities. We know that Villeroy is still very much a dove, but all the other ECB members, including Lagarde, saying that They are in a good place now on rates. And actually, Lagarde was relatively positive, saying that she said that what did she say exactly? Yeah, she said that Europe is well prepared for the next shock. So she was actually quite positive, Lagarde, and for sure not hinting at another rate cut being around the corner. And then we had yeah, the bond flows. Um, they're very they're very volatile, as we can see from one week to another. This is not a big amount, okay? This is relatively small. They are expressed in yen terms, okay? So they're not a very big amount. Those Japanese foreign bond flows, but it was a little positive the week before. A lot going on the foreign investment in Japanese stocks, though. We have seen that since Takaichi has been re-elected as a head of the LDP and now moving towards her being the next Japanese prime minister, the expectations for a very lax fiscal approach are pushing people more into Japanese stocks of late again. Okay, this morning, for the rest, not a lot really happening. Yeah, Nagel repeated no need for to move the interest rates, just like the rest of the ECB crew. And then we had the September CPI numbers in Europe. I mean, the core a little sticky, a little higher than the one that we had last month, but it did not move the market whatsoever. Okay, according to Miss Lagarde and Nagel, etc. There's no need to move rates. So, moving on from this one, what's next on the docket? We do have a few more speakers out. Now this one is can somebody confirm actually if we will get the IP out later on, or the capacity utilization rate? Because it says it is the Fed reporting it. I'm not even sure we are going to get it today. Okay, so for the rest, it may be an empty data calendar for the rest of today. Okay, but don't forget then over. Oh, we still have Bailey speak over the weekend. I think Bailey is actually speaking in the next 10 minutes or so, if I'm not mistaken. He oh, or is it BOE's pill? Okay. It's not Bailey. Bailey is only tomorrow, by the way. But I don't think it's going to change much for what is happening on the sterling right now. Rates. And what has happened? Well, what has happened is quite big. Now we've seen this depending on what pair you look at, the dollar has gone up or down. Okay, so versus the euro, it's gone down, and why is because we had a near perfect risk-off scenario yesterday and overnight. Okay, and we have to know, for those who are new to trading, that euro is also part of the currencies that are usually doing better in a risk off scenario, and that's what we got yesterday. Yes, um, it's been helped as well by the Le Cornu, the prime minister, surviving that no confidence vote, but it's also been supported on the euro crosser side, and especially if you look at stuff like euro versus commodity currencies, then talking about euro Aussie, euro Kiwi, euro Canada, for instance, they're all marginally for some, but they're all mainly higher, and euro sterling, which is also a risk currency pair, and that helped the euro to recover. Now, what's interesting here, and I wanted to show this today, is that we spoke about the potential double bottom, especially in our room. For those who were in our room, there's several people were looking at this, and we actually hit the target today. We actually overshot a little bit, a few ticks, but we hit the target today. So if you look at it from a pure technical point of view, We may have done the intraday move or most of the intraday move, and it may be supported by the fact that this 117.30 is um, halfway of the move that we had from half September into early October, down from 119s down into the 115 and a half zone. We are nearly halfway there. So this zone here, call it 2030, is going to be relatively important going forward on the top side of today. We don't know exactly what's going to happen with risk because we have seen this risk falling out of bed already several times and then all of a sudden recovering. Um, but assuming that the market is not going to be willing to go long risk into the weekend with what's to happen in the US with those protests, etc., and all the rest still going on the geopolitical front. It could be that we're seeing a little bit of a push here. I'm not ruling it out. Okay, I've sold most of my longs out. As I said already a few times, was long from around this green line around here. Sold most of them out today. I'm just keeping a really small one, going to keep it closer to the chest, perhaps around here, allowing for a bit of a return. But we will see, especially this afternoon, what the US wants to do with risk. And speaking about risk, and I already told you that the sterling is a risk currency, right? Just look at what happened. And I'm going to go on the short-term frame. As soon as risk really started to falter, we had this outperformance of the sterling, okay, yesterday. So we had a first little bit of a hold. Then the dollar um, got another knock on the head versus most currencies. So sterling followed the euro a little bit, and then all of a sudden this morning it stopped in its traces. Why? Because the sterling is a risk currency as well. This is one of the reasons. Yes, the UK rates also continue to trade a little bit softer. So we found maybe a bit of an inflection point on in the gilt market, especially in the yields market. But I think this move is rather due to risk, and we find it back also when we look at the euro sterling. Okay, yesterday I was talking about the support zone. For people in our room, know that I did add to my longs here, and was quite fortunate to got hit on my 65 as well. Equally so, as I usually do, I've been gradually letting some go, especially let some more go around this 87.20 again, which is once more capping the debate. But this is nearly purely a risk move, okay? Yes, the euro got some support as already explained, but if you're looking for risk-off moves driving euro sterling, usually euro sterling is relatively well supported. Also, um, yeah, we have her talking nearly every day, but Reeves, the promises that she won't put in a wealth tax only gave only very limited support to the sterling, and actually, on the contrary, probably investors wondering that if she doesn't raise too many taxes, where she is going to get the money to sponsor her next budget. It's still a while away, but as Ryan already mentioned several times, we are getting daily updates on what may or may not happen. Yesterday, the market didn't take it well, but this is also a risk move. Now, looking at euro sterling right now, we are back trading at around here, around 87.10-ish. So that means that this level is still being well respected. I trust that there's a few clever range players doing their stuff as well. It's probably going to have to break 25.30 perhaps even to continue to push higher into that 87.50, 60 zone. But keep an eye on risk, okay? If for whatever reason risk would actually surprisingly do well to end, or we get a bounce in risk later on today to close the week, we may actually have seen the top here of this range and go rather back into the middle of the range. But for now, looking at how equity markets are doing, looking at how commodities, etc., are doing, I'd rather think that we are going to err closer to the top end of the range, maybe even go for a walk above. We will see what happens this afternoon. Dollar yen and yen crosses. Finally, the yen has jumped off the political bus for just a little while, potentially. But it's jumped off and where in normal terms, where times where there's nothing special going on in markets, this is a normal move. When it's risk off, yen is getting bought. When the commodities go down, because Japan is an importer, net importer of stuff, yen is going up. And like we're seeing now as well, yields are coming up. We are seeing the US 10 years below 4%. That is also helping the yen. And finally, we are seeing this move. We're broken under this 150.75.85, also broken below the prior low, and we came close to the gap open after Takaichi's LDP had election. Okay, is it enough? Maybe, but it may not be enough today. Okay, depending on risk, depending on how the dollar behaves for the rest of the day, we may we bounced a little bit here, and if I go on the shorter time frame, you can probably, whoops, why is that? I probably see it a little clearer. We bounced this. This is the when Ishin leader Fujita said that they may be nearing an agreement with with Takaichi's LDP. This is the little bounce that we are seeing, that we saw, but on the day I'd be still a bit careful, okay? Because the politics in Japan may come back to the fore next week once we are over the hump of the weekend, okay? But for today, I trust the market is still going to look at risk, right? This is maybe a temporary situation, as I said, but I would not exclude that that we may see a bit of a further correction down to where? Well, that's going to depend how bad risk is behaving in the US. Okay, so first level to watch there, 149.40, back on where we were, which is actually, if you look at it, halfway of this move, and if you go to the shorter term move, it's not too far away. This is the election move, not too far away from the 61.8 of this move. So anywhere between 149.15 and 149.40, we need to pay attention to what happens. If it crashes through, I am not a gap trader, I'm not a gap filler, but if it crashes through, maybe the market is going to accelerate into a zone here. And if you look back left, into a zone here between 148.65 and 148, the figure 148.15, which has been a traffic zone as well, okay, which regularly found stops in market moves, all right? So this is where we may get down to if we see more risk off. Now, as I said on my morning update in our room, and for those who are in our room, they know already. If risk really falls out of bed, continues to fall out of bed during the afternoon, or our afternoon, during the US session, and we would get a move down to here, which is low 147s, then I will start to think again about the politics in Japan and about Takeichi. So I'm not going to catch a knife in this dollar yen right now. But if ever we're seeing like a panic move on risk, which is possible, being Friday, it may all of a sudden fall out of bed and see the 147. I think here in this zone, anywhere here, I'm going to start to think about next week again and the possibility of Takaichi, and perhaps get tempted. But that's still 250 points away from where we are. But never say never, because we have done quite a bit already, and yen can get volatile. So again, for today, I think rather trade the risk than politics, because we know now as well that the politics are relatively where they are. The one interesting for me on the day here is rather European, because taking into account what I said earlier on the show, that euro is also a risk currency which could move up and down with risk. So that puts euro and the yen relatively on the same side of the risk spectrum. Okay, so and this is one where I may be, if you want to steer away from the dollar, this is one that may be worth a look. Okay, if we start to, we have done this 147.80, uh, which is 38.2 of this move. Is it 38.2 of this move? No, it's not. No, it's actually the 38.2 of this move, that this bigger rally. And then below there's more levels waiting until 174, the figure 173.80. If you want to steer away from risk, even though yen may be the faster mover, thinking about that Japanese election, Takeichi, this may be one that finds support a little faster than dollar yen, for instance, if the dollar would get another knock on the head today. And then we, of course, have to look at the metals. I could look at everything today, but I'm going to look at the metals. Right. This is starting to get extremely volatile, okay? Are we at the end of the move? Impossible to say. And also, thinking about what's going to happen in the US over the weekend, probably or possibly too early to start to look for a top once more. As I said yesterday, yeah, here maybe resistance 4,300, maybe resistance 43 and a quarter. I was even talking about 42.70, but they are just lines and extensions on a picture, and we just ramping through everything. The market clearly does not want to be short risk, and gold is still the best expression right now in the market to have if you want to hedge against anything that can go wrong. Okay. And then I'm not going to stand in front of this, but looking at the volatility, okay, that we are starting to have, if there is nothing bad happening in the US, overly bad happening in the US, which would spur another risk of move and see another push higher, maybe up into the 44s or even 45, it could be that we see a bit more correction. But on the day, really, I would not stand in front of this unless we get, first of all, below 42.90, secondly, below 42.35, and especially below 4200. There is no reason, fundamental reason, to counter this. But as I said, it's starting to look a bit dangerous. Mark and Fred, I'm sorry, I'm not going to look at crypto because I don't trade crypto. I'm just going to tell you one thing. For me, the real stores of value are now clear. Okay, I mean, all those who think that crypto are a store of value right now, it's a lot of speculation. There's a lot less market making. There's a lot less natural interest in there than in stuff like gold, etc., etc. You would have asked me, if gold rallies, is crypto going to rally? I don't see any reason why crypto is would be rallying. So I'm having them on my screen, but just for information, I'm not trading them. And for me, really, the longer this continue, I think the longer this continue to the other side, because people are getting out, because it's such a speculative thing that without real market makers. When people talk about market makers in crypto, it makes me chuckle. Silver getting very, very close to that 55 bucks. It's actually a little less violent than gold of late, but it's still very, very, very much in demand. Here as well, I wouldn't start to counter this. This spike is just a little too close, like 53.5. But okay, I mean, it's been a low here, it's been the high here, the low here, so 53.5. If it starts to get back below, start to pay attention. But again, in the more medium term, nothing changes for as long as we don't start to break those lows here, okay? So violent setbacks, yes, we have seen them. Yes, it could still continue. But and we were musing about it in the room with Stelios as well. Stelios is also thinking we could be getting a bit overstretched, etc. I don't disagree on that. But where we will have it today, maybe, just maybe, if on Monday we don't see anything worse happening in the world, maybe then we can see a bit of a setback coming. Okay, just a thought. For today, be very, very careful what you do still with risk. And we have seen the metals being really the ones that getting bought now on risk off. But be careful with what's happening with risk. Actually, I'm first perhaps going to have to look at the S&P 500 because we are we are maybe in a bit of a danger here for um, a deeper correction. And I think somewhere around, if we don't recover, just look at this one. If we don't recover very quickly, 65.85, where are we now? Where are we now? We just have a look on the we're at 65.60, okay? It's looking breaky right now. But again, we're Friday, so be careful. But I think it's quite close to the market for me. 65, 80, 85. We are just trading below now on the S&P. Keep an eye on that level, okay? If we retest to open New York and we get lower, we could see a move. Why not down into the low 64s, okay? It is a possibility, okay? Because risk really got hammered, not only because um, of geopolitics or whatever, but also I think, as I've spoken before about it, with those U.S. banks going to the Fed's lending facility, it's putting people a bit making people more nervous about what's going on right now on the risk front. Okay, so I think it may be a possibility that we get a further move down to around somewhere 64, which is 64, 40s here. Prior high, prior low from where we started the last jump higher. It's just a possibility. If you close above 65, 85, 90, yeah, it will just have been another correction. We will see at the end of the day, okay, for equities. But again, as I said, we can look at all the currencies that we want. Just know that commodity currencies, they have got hit again because the commodities have been hit, because oil has been hit. We've also seen the dollar Noki going back up. Aussie and Kiwi being sold. But again, the Aussie is trying to put a fight here around that prior low. And we do have this support zone around here, which also showed up here in the Aussie, somewhere down to 64.05-ish. Keep an eye on it. I dare to imagine that they may be going to try to take it down there initially in the New York time zone, but then keep an eye on where it goes. And again, being Friday, it may be more interesting to pick this one up on the Monday morning, because if things get worse, it's probably going to get worse for this one as well. But if things don't really get worse, and we see copper, for instance, retaking $5, this could also start to rebound. Okay, and now the Swiss is obviously one of those currencies that has been bought on the back of the risk of proper risk of move, and the Swiss is getting bought. Yes, we are getting close to very, very important levels here. Okay, Michael, that is indeed the case. If you look at this, we are really, really, really close to very, very important levels around 92.10. Again, this is a risk pair, and it could. I'm not even sure where we could get up to. Let me just try and do something fancy here. Um, well, it is also the 127 extension, but if we go down, next level, if we would break this 92, 10, 20 or so, next one would be 91 and a half, and then you're looking really at 90 levels into the 90s. Just know that even before risk got really hit in the markets, the Swiss was already doing pretty well. We know that in half one 2025, the central banks have upped their reserves incrementally, and it's still a very small portion of FX reserves, but they have included Swiss franc a little bit more in their FX reserves. I think they are not they were not done. It's this move seems to me obviously this is the risk move, but look, I mean, even when risk was doing better, yes, we can also attribute a part of this move to gold moves because of Swiss and gold correlation. But I do think that those central banks have been a part of this move as well. So it's gonna take a bit to reverse this. 92.60, obviously prior low. You retake it, you're going back up, but then around 93, anywhere between 93 and 93.15 on the Euro Swiss, unless something really positive happens on the risk side of things, it's going to be probably a hard nut to crack. And I'm not excluding to see this just either stay here or continue to slide down. And then we are going into the question of the SMB. Beat me, I don't know. We know Schlegel is not a huge interventionist, but we can never rule them out. The problem is with SMB is that they will not aggressively come into the market and buy it, but they will sit on the bid to slow down moves. So will they be of great help even if they come in? I'm not 100% sure. The thing is, though, that maybe because they were getting a bit nervous last time we were there, maybe, just maybe, dollar Swiss is getting into a zone where they may not like it. We know that they have relatively equal reserves in dollar than euro. Okay, so one will, if they intervene in one, it will entail a move in the other one as well. For instance, if they would buy dollar Swiss, they will probably buy euro dollar as well to balance the reserves. If they start to do euro Swiss, on the other hand, they will sell euro dollar. So it's a bit of a flip the coin what they need to do, where they come in first. But both of the crosses in Swiss are close to all-time lows, and really needing probably close attention. So good spotting, Michael, there. Okay, looking at the time, I'm going to close it here. Thank you all for the week in our company. Hopefully also Ryan will be back on Monday. Wishing you a safe Friday in the trading and a very nice weekend, hopefully a peaceful one. And we speak to each other on Monday. Thank you, guys.